if tariffs are imposed, they could potentially affect gold, affect silver, copper. In fact, has been moving a lot as well from east to west. And interestingly enough, a lot of this metal is ending up in, it's moving to New York, but it's ending up in private vaults.
Welcome back to Kitco News. I'm Jeremy Szafron. Well, gold has hit another new record high as investors rush to safety after President Donald Trump announced new auto tariffs. Now, there's fears of a broader trade war reignited the gold rally, of course, pushing April futures up nearly $50 on the day to trade at a new high of above $3,070 an ounce. And if you can believe it, this is gold's 17th record high this year. But what about silver? A lot of people are asking. Well, silver is also up more than 40% in the last 12 months, outpacing gold and even other most major asset classes, yet its record high of just below $50 remains out of reach, with spot prices currently trading at around $35 an ounce. However, the question is this about to change? Today on the show, we're digging into a story that's heating up online, but hasn't really broken through the mainstream headlines yet. The hashtag Silver Squeeze is trending once again, bringing echoes to the 2021 retail silver rush that briefly sent prices soaring and rattled institutional markets. Now, here in late March of 2025, the movement is back, and it's dubbed Silver Squeeze 2.0, with social media platforms like X lighting up over a planned collective buying event set for March 31st. Now, the idea here is to buy up as much physical silver as possible to put pressure on what they claim is a manipulated paper market. Now, joining us to break it all down and to help us understand if this movement could spark a real market disruption is one of our friends, Peter Krauth. He is the author of The Great Silver Bull, and he's also the editor of the Silver Stock Investor. Great to see you, Peter, as always.
Jeremy, always a pleasure to be with you.
Well, we got lots to talk about, my friend, particularly on the silver front. I feel like I got to give a quick little explainer to the viewers, because the silver squeeze in 2021 was an attempt by retail investors, primarily from the Reddit forum, Wall Street Bets, to create a short squeeze in the silver market, similar to what was executed with the GameStop stock. And it's also worth noting that the gold-silver ratio sits near 88.9, which is historically suggests silver may be undervalued relative to gold. So let's start with the basics. Peter, why is Silver Squeeze, the hashtag, trending again right now?
Well, there's been a lot of silver flowing into New York from London. There's concern about tariffs, of course, and if tariffs are imposed, they could potentially affect gold, affect silver, copper. In fact, has been moving a lot as well from east to west. And interestingly enough, a lot of this metal is ending up in it's moving to New York, but it's ending up in private vaults. So I just wanted to sort of throw that in. That's sort of an interesting aspect to sort of what's going on. And there's, as there has been for a long time, ongoing talk about the potential that silver prices are manipulated and kept down. And interestingly enough, I'm actually myself wondering about the March 31st. That's just a few days away. It is before these new tariffs that Trump is talking about should kick in on April 2nd. It's the end of the month, end of a quarter, and it's interesting that this to see what kind of effect this could have. You mentioned earlier there was a similar kind of event that took place. I write about that in my book in some detail. That took place in late January of 2021. So, just for a bit of context, we were into the COVID period for about a year at that point, and there was this call on Wall Street Bets of Wall Street Bets on Reddit, which, as you alluded to, it sort of was a step that came on after this whole sort of GameStop phenomenon. And what they did was they encouraged people to buy the SLV ETF to kind of trigger a short squeeze on silver futures. Because that's the idea, is that there are always such large amounts of basically naked silver shorts in the market, in the futures markets, and that these are there to help suppress the silver price. So what happened at that point was, in a matter of about 3 days, silver went from $25 to $29.50. Interestingly enough, gold was actually flat during that period. So it really was very much silver specific. The average silver stock was up about 30 to 40% in just 3 days. The volumes on silver miners were up 6 to 7 times. And we saw SLV, its volume, its daily trading volume was up 9 times. So, there were some interesting effect on the silver bullion dealers as well, because people went out and bought physical silver.
Mm-hmm. Yeah, absolutely. And, I'm curious because we keep talking about 2021. Obviously, now with this tariff talk, we're in a different environment. So, I'm kind of curious about how it's comparing to that year so far. I mean, as you mentioned, March 31st is basically around the corner now, but there's a lot of chatter online. How does it compare with what we saw back in 2021?
So, I mean, we were in the early days of COVID. That's a little bit different. What's different now, I think, to some extent, is the availability and the premiums on physical silver. They're much more sort of in line with what you'd consider normal. However, interestingly enough, what I find kind of lines up is there is a fair bit of tightness in the market. Mm-hmm. We're seeing that because lease rates on silver are several times what's considered normal. So that's a clear indication that the physical silver market is really quite tight. And so what you have is this member of the X or formerly Twitter community, Squeaky Mouse, who's encouraging people to buy physical silver or buy the Sprott Silver ETF, which is considered a solid physical silver ETF, where they don't lease out the silver, and there's no sort of, questions around, that sort of treatment of the silver that's used to back the ETF units. To go out and buy either physical or Sprott PSLV ETF to basically squeeze the shorts out of their naked position and help drive the silver price higher. There's about 223 million silver ounces that are net short right now. That's about 25% of the annual mine supply. So it certainly is significant. And if you look at the ratio of paper silver to physical silver, we're at something like 378 to 1, which is well beyond any other futures market for metals of any metal, I should say, or any commodity. So really outsized sort of ratio of paper to physical.